investors got really nervous. They got nervous about the conflict in Iran and how long it was dragging on, how much it was costing. They got nervous about the size of the deficit, and they just collectively woke up anxious. And when investors get anxious, they take their money out of whatever it is they haven't invested in and they put it in safe places. Gold is safe. All right. Last week, investors got really nervous. They got nervous about the conflict in Iran and how long it was dragging on, how much it was costing. They got nervous about, these trade wars that are happening. They got nervous about the size of the deficit, and they just all kind of collectively woke up anxious. And when investors get anxious, they take their money out of whatever it is they haven't invested in and they put it in safe places. Gold is safe. Bitcoin to some people is safe. I wouldn't consider Bitcoin safe, but some people consider Bitcoin safe because it is the quantity of Bitcoin in the world is capped. It's artificially capped, but it's capped the same way gold is capped. So a bunch of investors woke up last week and decided, I'm not feeling great about the United States. I'm going to pull my money out of US Treasuries and put it into these safer assets. And what the Treasury did in response to this was, since people were selling these US bonds, they bought them to keep the prices of those bonds stable, essentially. And the way they did this was, they did some financial magic where they sold debt bonds that were shorter term, but that would be paid back in the matter of a couple of years, to buy the bonds that would be paid back over 30 years. It's called yield curve manipulation. And this was widely criticized. This was Scott Bessent's plan. The plan, for the most part, didn't work. It didn't really do anything. I talked about that last week, how it was basically like shooting a water gun at a forest fire. And he's gotten a lot of flack from it. And he got a lot of flack from his former boss, Stanley Druckenmiller, who wrote this op-ed in the Wall Street Journal criticizing the move, saying that it was pointless, saying that it looks bad, just kind of tearing it to pieces. Now, what's kind of funny about all this, this is big news in and of itself, that Bessent's former boss, he is the former mentor of Scott Bessent. I thought he was his boss, but he was his former. Oh, and they both worked for George Soros's fund. That's funny. So he used to be his mentor, his boss, when they were both working at the Soros fund, and he put out this op-ed criticizing him, which is in the world of finance, that's high drama. Your former mentor comes out and says you made a boneheaded move. That's drama. But there was more drama to this, which is that people read this piece and were like, "Hey, this reads a lot like AI. This sounds like AI writing. Volatility was contained and trading was orderly. Not a malfunction, but the machine doing its job." That's like classic AI phrasing. Not this, but that. With the M dash right there. And when people read this, they were like, "This sounds like AI." People ran it through one of those AI detectors. It came back 100% AI written. And there was so much talk about this online that Druckenmiller came out and he copped up to it. He said, "Yeah, I used AI to write this." And then the Wall Street Journal editor came out and said, "It's fine that this op-ed was AI written because the opinions in the piece represent the opinions of the author." And this is just kind of opened up a Pandora's box of questions about is this okay? Are we okay with this? Are we okay with the Wall Street Journal opinion section printing AI written prose? Is that the standard that the Wall Street Journal should have? Is this a standard that other newspapers should have? Are we as readers okay with being fed AI slop, essentially? I mean, it's like, what is AI slop? Because probably what happened, and I don't know this for a fact, but probably what happened is that Druckenmiller gave his comms team maybe a bulleted list of arguments that he wanted to make. And normally the comms team, they would ghostwrite an op-ed for him. I'm assuming. I don't know for a fact. they might ghostwrite an op-ed for him. And that would be, human generated, but still not his literal words because it's being filtered through a comms department. But this time, what probably happened is that instead of the comms team taking that bulleted list and writing an op-ed by a writer, that comms team put it into Gemini or ChatGPT or Claude and had the AI tool do that work. And do we care? Should we care? For me, I think that this is icky. This is like icky, and it's unbecoming of the Wall Street Journal. But I understand that the Wall Street Journal is kind of in a tricky situation because they want op-eds from people like Druckenmiller who have these credentials, who have something salacious to say. I mean, this is like a very interesting piece, even taking apart the AI from it, just the fact that he stamped his name on a piece that was criticizing his former mentee and current sitting US Treasurer, that is compelling in and of itself without looking at the quality of the writing or who did the writing. So I understand why the Wall Street Journal would want to publish it. I just feel like they sh- they should they should have maybe caught that it sounded like AI and suggested to Druckenmiller and his comms team to make some edits to improve the writing, because I think that copy pasted AI writing is bad writing and you can smell it when you're reading it that something is not right. I feel like AI writing, it lacks a point of view in a way that human writing doesn't. And even if a ghostwriter is somewhat like diminishing the POV, I think the ghostwriter, at least they have some kind of human empathy to the person that they are ghostwriting for, where they can attempt to capture that POV in a way that artificial intelligence could not. So I understand that these important people use ghostwriters and it's an accepted practice, but I think that the ghostwriter does do a better job than the AI. And this guy, he's rich, he can hire a ghostwriter. He has the money. But by choosing to use AI, he's like taken away a job and created lower quality output. But, I'm not like here to dunk on people who use AI. I use AI, but I really am increasingly trying to be very careful about how I use it because I don't want it to diminish the quality of what I do. One of the reasons why I'm live streaming now is because I feel like live streaming is the most unfiltered way to present my opinions in an authentic manner. And the temptation to script something and then have AI edit that script, it's like it's hard to resist. But when you're live streaming, there's like no resistance that has to happen because I'm not using AI right now. I still use it to code. I think it's been great for coding. I actually love it for coding. It's amazing. I like almost wish that they would that like there wasn't any of this ability to generate written words or images, and it was really just a coding tool, because I feel like as a coding tool it is phenomenal and it's made my life easier because coding, it's about logic, and then the logic is just translated into a language. And what the AI tools do is you can just give the AI the logic in any kind of language you want, and it'll translate it for you into the language of Python, of R, of whatever it is you're using. So I feel like I'm not at all ashamed to use AI tools for coding. I'll do that all day long and I can just read the code output to validate it. But when it comes to writing or even anything that I care about, really, in terms of the presentation, I think that it's being misused and it's degrading the quality of what we get out there, and then we have all this slop. Um, so that's my take on that. Let me see. Does anybody else have a take? Do you think it was right for the Wall Street Journal to publish an AI written op-ed? What do you think they should have done? Let me know in the chat. And also get my book, Hate the Game. Thank you. I really want to know podcast for pointing that out. I don't have it with me because I'm not in my house right now. You can just pretend I'm holding it up. Hate the Game, Economic Cheat Codes for Life, Love, and Work. It's not AI written. I wrote it. My editor was a human at the University of Chicago Press. I had a copy editor who was a human. It was human generated. And you can tell when you read it, like AI couldn't write what I wrote. AI doesn't know the inner workings of my mind well enough to say what I was saying. So, if you want to really know my thoughts, go check out my book. It's about how to use economics to advance your career and get the things you want out of life. And I use examples from my own life to demonstrate how I have used my PhD economics training to get what I want in my career and advance my career. So if you're somebody who wants to make more money, reach your career goals, live a better life, get the book, hate the game. Back to this opinion piece. So what happened in markets is that investors were freaking out about the debt. And the reason that investors are freaking out about the debt is because the larger the debt gets, I have this little bag of money here with a bomb on it in the bottom red corner representing the debt, the higher inflation could go in the future. And the higher inflation goes, the less their money will be worth in the future, which means that they demand better returns on locking their money up in something like a 30-year US Treasury bond. So rates on US Treasury bonds went up last week. Besant tried to intervene to get them back down. It did not work. And he's being kind of ridiculed for that. But the broader thing that's happening in the market is that investors are getting really worried about our debt, about the breakdown in global trade, about disasters, putting us into this world in the red where we have low growth and high inflation. But what we also have in our economy right now is a lot of AI investment, especially in data centers. And all this investment in data centers is leading to more growth in the economy, kind of offsetting this decline in growth from the debt, but also it contributes to inflation because all this money is getting spent on limited resources for these data centers, limited labor supply, limited materials, limited, money just in general, and that drives up inflation. So investors in general are worried that we're kind of moving into this orangish red region of the world. And I have a YouTube video about this explaining this. It's called Where the Economy is Headed, if you want a more thorough explanation of what this chart means. But investors are getting more and more worried that we are moving into this type of world, kind of an orangish red world, where we have, pretty good economic growth because of AI, but very high risk of inflation, not just now, but 30 years from now is what investors were freaking about last week. We have $40 trillion of US debt. How big is that debt going to get 30 years from now if it's already this big now? And that's why the yields, the returns that investors are demanding on these 30-year bonds went up. That's what Scott Bessent tried to address and he failed. And I think you just have to accept that this is the world we're in. And the real way to address this problem is to lower the debt through less government spending and higher taxes, or to start cooperating with other countries so we don't have this breakdown in global economic cooperation, or to make investments in climate change mitigating technologies to reduce the risk of these natural disasters. Other ways they can address this is to do initiatives that get us more into this green region. I have AI here, but you can't get to like the actual AI without investing in data centers. So accelerating, the deployment of AI. Urbanism is another one, getting more economic output out of our cities by allowing more people to actually live in cities with higher density homes, having better public transit so people are able to afford to get around in their cities. Just designing our cities better, you can get a lot of economic growth and low inflation there. Nuclear, that's another one I have here, but really any kind of uh, technology that lowers energy costs is going to pull us into a place where we have lower inflation and higher growth. And that's what the government should be focusing on. This kind of manipulation of markets, it's a band-aid on a bullet hole. And really what it does is that it tells markets that you're panicked. And if you're panicked, then they get even more worried about the state of the US economy and how bad things are going to get. So it's almost counterintuitive, but by Besant trying to intervene in markets to get interest rates down, they went right back up because the market was like, why are you acting like this? Why are you freaking out? This is not how somebody in control acts which is not, it was an unprecedented move. It was unprecedented for that kind of intervention in the markets to happen.